thank you all for being here, for your interest in meeting startups and investors. My name is Volker Sick. I'm at the University of Michigan in the Department of Mechanical Engineering. And there I have the pleasure to lead the Global CO2 Initiative. Our goal is to help develop and deploy technologies that will utilize carbon dioxide as a feedstock to make profitable products. And that's of significance in two ways. We have the ability to draw down the CO2 concentration in the atmosphere, all the while doing something useful. And I think that's really a historic opportunity. We have the confluence of two factors, right? The imminent and really urgent need to draw down CO2 at a record rate. At the same time, we will need to keep in mind that a lot of the products we use today that are made from petroleum, we will need to use in the future as well. How do we make those? So by meeting an urgent climate-related need, we can also help build up an economy that David Babson from ARPA-E this morning called out twice. Said this will become the biggest global industry in the future. So it's more than just small things that are on the horizon. It's more than a curiosity and the interest of exciting people like the startups that we have here and our investors. In this conversation this afternoon, we want to drill down what is the particular role of startups and investors and how they think about this. I mentioned this urgent need to get this done. And 4 years ago, when we started the Global CO2 Initiative, there were less than 200 companies that worked in that space. Just a month ago, the Circular Carbon Network, in collaboration with CO2 Value Europe, Carbon X Prize, the New York State Trust, and us at the Global CO2 Initiative, and Carbon 180 launched a new directory of companies and deals that are out there. It's grown substantially and it's continuing to grow. But are we on the right track? What are the challenges that we face? Most of the products that we make, if not all, are just replacements of what's already out there. What are the thoughts that we will have to address? To replace something we have with something that, at least at present, is more expensive. How do we create a demand? How do we improve technologies? And invent, assess, and deploy at a record pace. If we look back to the 1960s, the Apollo program really, in parts at least, a matter of national pride, mobilized the nation. How do we now mobilize the nations? This is a global problem, and we're here to look at ways and mechanisms to drive this. We need to make sure that those folks in supporting our startups make sure that we cross the valley of death fast. We run. We do not walk through it. We run. And as such, I'm really excited to be here and take a very quiet role from here on out, but let our panelists talk about who they are, why they're in that space, and then we will start a dialogue that hopefully includes all of you. We have not at all the intention to just lecture to you here for 2 hours, but really also have your thoughts, your questions, and concerns. That's it. David Ilanowitz will be first.
Thank you, Volker. And thanks everyone for being here today. So David Lenowitz, my firm's called Zero Carbon Partners. I was 25 years in private equity, and I invested in and ran a bunch of companies until about a little over a year ago. I decided to shift completely to climate change, originally from a philanthropic standpoint. And then in November, I came across the IPCC report that talks about the need for carbon dioxide removal that we're all familiar with here. And at that point, I thought, well, gosh, that sort of sounds important, interesting. And I read all the government reports and the white papers, a bunch of the patents, and spoke to a lot of the top scientists and met a bunch of the companies. And as a consequence of all that, I set up a new investment entity called Zero Carbon Partners. I put $50 million of my money into it, and I've gone out and tried to invest in scale companies with the goal to have companies sprint across the valley of death, as Volker would say, and hopefully get to the point where each of these businesses has potential to take a minimum of 0.5 to 1.0 gigatons per year of CO2 out of the atmosphere. So that's really what my general goal is. I mean, and just a quick thing on my background. When I was in private equity, I was a generalist, which is, I'm going to stand because these stools are kind of funny. So, and a generalist is a nice way of saying I didn't really know anything about any of the businesses that I looked at. So, as a consequence, I looked at a lot of different companies, and not only did I not know much about the businesses, but unlike most private equity firms that would take, say, 4 to 6 weeks to put together a proposal, I always made a proposal within 24 hours of meeting a company. So, my motto was, I may not know what I'm doing, but I did it quickly. And and then I decided I turned up a notch more and decided, well, not only did I not know what I was doing and I was moving too quickly, but I thought, well, why don't I run these companies as well? As Hunter Thompson said, when the going gets weird, the weird get going. So, and the weird turned pro. So that's what I decided to do. And, the outcome of this, you might say, well, gosh, what was the outcome of this strange experiment? And, in private equity, the upper quartile returns are about 1.5 to 2x multiple invested capital. And over 25 years, my returns were 63.5 times. So, and the point of that here, as relates to this, is that I don't know a lot about stoichiometry or mass balance or nuclear physics. And, the people on this panel and a lot of people in the room, that you could run circles around me on the basic science or technology and engineering. But there's one thing that I do know, and that's opportunity. And what you have here is just an incredible opportunity. I mean, whether you call it going to be the world's largest industry over time, or you just look at the data. I mean, according to the IPCC report, they talk about 10 to 20 gigatons per year. I think that's way off. It's going to be at least 2x that, most likely based on the normal expected path emissions. That'd be 20 to 45 gigatons a year. If you use a median cost of carbon, say $100 a ton, that imputes to $2 to $4.5 trillion, and that's for carbon dioxide removal alone. You add carbon dioxide utilization. That's a market that McKinsey forecasts to be $1 trillion. Carbon 180 said that their estimate is $5 or $6 trillion. So you have, basically multiple trillions of dollars. Today it's zero. So, for an investor, that might be an interesting place to participate. So, anyway, that's my intro. So, thanks everyone.
Gabriel Crum.
Hey there. Thanks for having me here. Look forward to getting to the more interactive part of the conversation. So, I'll try and keep it quick. Prelude Ventures, I'm co-founded and launched Prelude Ventures in 2013, but we had been working in the sector since about 2009 under a different fund name. And what we do at Prelude, we invest in the low carbon economy. So if a company, when it gets big, when it scales, can meaningfully reduce CO2 or greenhouse gas equivalents in the atmosphere, then we invest, or we might invest, excuse me. Yeah.
Who of you is here because they expect to walk away with a check?
Not so fast. Okay. We invest in energy, we invest in food and ag, we invest in transportation and logistics, we invest in advanced materials and advanced manufacturing. That's one thing, not two. We invest in data and computing, and actually we just discovered we invest in fashion. Turns out putting clothes on our backs is 10% of the carbon globally is associated with that fundamental task. So we have now 2 or 3 investments in the circular economy and in fashion or clothing manufacturing, depending on how you want to say it. We invest about $75 million each year into new and existing portfolio companies. So we're, if not the largest venture investor in the space, I don't know one that's materially larger. But you asked something much more fun and interesting. Why are we here? Why am I here? And I love thinking about that. And really, I've been involved with environmental issues and policy and work since about a year after, or 2 years after I graduated from college. But the reason I'm here is because of something that happened in college. I grew up in New York. I went to school in New York City. I always loved to ski and that was about my biggest contact with the outdoors. When I was a junior, the summer after my junior year, I drove my parents' car from New York to California to go spend a summer with my sister, who was out in Stanford, and my parents wanted the car in Berkeley. My father's a professor, and they were on sabbatical. I never made it. I drove in with my friend, pulled into Yellowstone Park at like 2 a.m, pulled into a campsite, took the cooler out of the backseat of the little Honda Accord, put it on the roof, tilted the seats back, and went to sleep. And we were woken up like 3 or 4 hours by a ranger tapping on the window with our New York plates saying, "Son, you're not from here. This is bear country. You don't put a cooler full of food on the roof of your car." So we woke up, we put the cooler back in the car. We were now awake for the day, and we were in Yellowstone. And it was like the most beautiful place I'd ever been. And I looked at my friend and I said, and we actually talked about it sometime around Chicago, let's get jobs here for the summer. And I got a job as a waiter in the park in one of the villages. And I went hiking and backpacking every weekend for that entire summer. And that was it. Like, this became like the thing that's important for me. So why are we here? That's why I'm here. Like, that's why, it was a long time ago. It was a long time ago. But that's why I'm here, and I'll bet everybody has a story like that. So thanks for asking.
I'll do it in a little bit different order, but I'll take it later. I like that. That's great. I'll break why I'm here up into sort of 3 pockets that led me here, 3 parts of my career. So I'm a chemical engineer by training, material scientist, worked for big companies, Dow, GE, Cummins Engine Company, the first third of my career, learned how big companies work and how they don't work in some cases. Dow was nice enough to send me to Stanford Business School. I came back with a business plan in my hand and said, we need to rid the world of plastic waste, and I know how to do it, and here's how we're going to do it. When they said no, I started a company. So that probably the stupidest and best thing I ever did in my life at the same time. So that's the second part of my venture. So I ran a clean tech, hard tech company for 20 years, literally from an idea in my garage and an idea I brought back from Stanford. And Dow said no. Hardest thing I ever did in my life, but the most rewarding thing I ever did in my life. I raised $150 million of equity, $100 million of debt to build 3 world-scale plants. Sold it about 4 years ago. Even before we sold it, I was already bored and wanted to get back to the early stage startup space. And I also realized I had 2 kids by this time. My old father, because no woman would put up with my schedule as a startup. So any of you entrepreneurs out there, keep that in mind. I literally couldn't get married to my 40s because I was wedded to my startup. And I see that happen a lot. So that's a side point for you entrepreneurs out there. Still worth it though. Still worth it by far. And in fact, I met the fantastic woman that understood me. So I realized that ridding the world of plastic waste, which is still something I do. That's my side job now, and particularly from the oceans. But there was a bigger pollutant out there that was more important, namely greenhouse gases, so CO2 and methane, and that was going to have more of an impact on my kids than plastic in the oceans. That will have an impact as well. So I said, that's the thing I want to recycle next. I want to figure out how to solve that problem. So I started, foolishly enough, trying to start my own fund. Started calling up people like Gabriel, like Marty Reed, my current partner, and everyone else I could talk to about how to do that, and they all told me I was completely nuts. This was, 4 years ago, the clean tech bubble had busted, right? Nobody was raising clean tech funds. Everybody was running away from clean tech at that point. Long story short, my partner was asked to run this new fund that was started about 4 years ago, and he grabbed me and he said, I need some help building it. Would I be interested? He told me it was backed by 2 oil and gas companies from Canada, and I said, are you nuts? What are we going to do? We're going to fix the climate with 2 oil and gas companies? Long story short, yes, that's exactly what our mandate is. So the name of the company's, or the name of the venture fund is the Oak Innovations, and we've been given $100 million, probably going to be doubled soon, to fix the climate problems, focus on greenhouse gas abatement and emissions, and get these oil and gas companies in Canada to a cleaner energy future. Find out what companies they should be running in the future. that's different from what they're doing today. That's our mandate. So we invest in things like carbon capture. In fact, one of our carbon capture companies back in the back, Mosaic, Tom McDonald, the CEO. Carbon to value. We invest in the clean hydrogen, so low carbon hydrogen. We invest in energy storage. Anything else that can have a measurable greenhouse gas impact in the energy space. That's sort of our mandate. The other thing that's different about us that I think it's important for this group to understand is that both my partner and I have run clean tech, hard tech companies. So we thought that was one model that was broken about the VC world. Most of the VCs, at least my investors, and I raised money from a lot of investors to grow my previous company, really had never run companies. They were smart, they were brilliant, they were financial engineers. Most of them really didn't know what it took to run a startup. So hopefully we bring a little bit of that experience to the table, and we've been in the startup shoes. We know what it's like, hard tech in particular. We also said the other thing that's broken about the VC model is that it has a 10-year time horizon. Most VCs, I don't think Gabriel's does. Maybe you want to speak to that, but most VC funds typically have a 10-year time horizon when they need to get their money back to their investors. So we said that won't work. Hard tech takes longer than 10 years, unfortunately, in many cases. So long story short, our fund is an evergreen fund. All the proceeds from our funds, should we be smart enough to get some proceeds back into it, will go back into the fund and continue to grow the fund. And then since we have strategic investors, we looked at the strategics and all the value they bring to companies, which is a lot. But we also looked at the things that we felt that they did that hurt early stage startups. And we said, we're not going to allow that to happen in our fund. Namely, they're not going to take any special rights. So our funders take absolutely no special rights in the companies. Our companies can sell their technology, partner with the competitors to our funders. That's in our bylaws. And we said that's really important because the strategics often smother the companies they invest in too early. So we tried to take the best from the strategic world and blend it with the best from the VC world, try to get rid of the stuff that didn't work so well. And this is an experiment. We're a startup too. We're 4 years into it. We'll see how it goes. We've made 13 investments so far and hopefully more in the same space.
Thank you, Mike. Keely.
Hi, my name is Keely. I work for a company called Insight.org. I'd love a show of fans by who has had a really windy path in their career to get where you're at today. Cool. Who thinks that they have the coolest job today? Okay, I'm right there with you. So I spent my early career at, of all things, as a health and wellness coach in Southern California. I moved to the Bay Area 6 years ago, and my first job here was at Kleiner Perkins, which probably cares a little bit less about carbon than most of us in this room. I ended up meeting this wonderful woman, Swati, and her husband, Matt Rogers. Matt Rogers co-founded the company called Ness, and Insight today is essentially all of that capital put to use in three different ways. So we have a venture fund, we have a foundation, and we also do political work. My day to day is, and part of the reason why I'm here is I get to meet people like you. So we think about things really holistically. We are an early stage, that's our specific niche spot. So we invest in early stage companies, we invest in early stage nonprofits, and we also invest in people that might be running for office for the very first time. And we think of it really, really interconnectedly. So if you take carbon capture, we have 2 investments in the carbon capture space. On the nonprofit side, we are one of the founding members of Carbon 180, and Matt was one of the first anchor donors that came to the table and said, we need to pay for research in this field. We need to take what's a fringe topic and really elevate it to the mainstream. We helped fund the National Academy of Sciences report on carbon removal, which was elevated to 45Q. And then on the policy side, 10 years ago, the government wasn't ready for renewables. I think that we're getting there. And how we think about that is you have to fund the people. So people that are writing legislation, people that are enacting really aggressive climate policy, that's important. So we look at things, like I said, really holistically, where our money can be put to use in the most effective means. We don't have sort of a carbon removal specificity. We invest in all different sectors, but I would say probably this year, 70% of the investments are in the climate space. We've made 13 new investments. We're super, super active in terms of size. We invest about $5 million a year. We give away in grants about $5 million a year, and we do a little bit less than that in the policy side. So very excited to be here and meet you all.
Thank you. Yeah, it's great to hear the different motivations that you all bring to this space, and a lot of personal background that drives this. But I mean, at some point, I can imagine you need to sort of think, okay, I'm motivated by my experiences back at Yellowstone Park, but how do I then pick the next investment? What are the criteria that you look most into before deciding this is what I want to invest in? Maybe you can all reflect on this, because I'm sure there are different criteria. I remember from David, it's the outcome, 0.5 gigaton or more a year. But even then, you need to down select, because there are probably a lot of companies that will play in that space. How do you proceed from here on out? What do you expect to hear from those who want to work with you?
Well, from my standpoint, as Volker mentioned, so the first thing is having a substantial impact on climate change potentially. The second is, I took a somewhat different approach to this. I mean, most venture capitalists say they have what's called a bet the jockey strategy. Go out, find the best management teams, and support and invest in them. And I decided to do it differently, because I try to do everything differently, for better or worse. And so I chose to do a bet the horse strategy. So I just looked for the best technologies. And I wouldn't say I didn't care about the management team, but it's like, regardless of management team, if I like technology, I was going to do that. So what I'm looking for are the best technologies, and I'm looking for a place where I can contribute both my capital and my time, because I've had experience scaling businesses. My last company where I was CEO was a flooring company. I grew from one location of 40 million in revenues to 70 markets and 700 million in sales before I exited a couple years ago. So I'm looking for some place. If they have access to plenty of capital, they don't really need my time. Even if it's an interesting business, I don't do it. So it's more my capital makes a difference on the margin, and my time and contribution makes a difference in the margin. And as a consequence of, I've made 4 investments to date, and 2 of them I'm fairly involved in. One is, Bo's involved in Solidia, which is CO2 to concrete company, where I try to be helpful in terms of some of the ways that they can interact with investors and strategic questions. And then also, I'm in investment in Global Thermostat, one of the 3 direct air capture companies, which I've joined as a senior advisor on a full-time equivalent basis. So I'm working about 70 hours a week for them out of my 90+ hours a week that I'm working right now. And that's a place where I think that there's a lot of potential. If you can, obviously there's been a lot of discussion about direct air capture, and it's sort of the holy grail, so to speak. If in fact some company, hopefully this one or any number of them, can find a way to do it and do it on a big scale, that can certainly move the needle in terms of climate change.
How do you approach this? We started with 200 companies 4 or 5 years ago. Now we see the number grow, but how do you pick?
So, thinking how to answer this question, it's a good question, and I'm trying to think of the answer that's really helpful for you, assuming you're entrepreneurs, the people who are out fundraising in the room. I'm going to try and sort of approach it from what's the good answer for you to have in your head, and maybe it's not for everybody, but at least it'll work for me and for food. Yeah, look, carbon, that part of our mandate. Yes, if you can't walk in you can walk in our front door. We're not gonna consider the investment if it doesn't meet that criteria, but that's just kind of like the ante to get to the table, right? So I have limited partners, right? What am I paid to do by my limited partners? I'm paid to take their dollar and turn it into like 2 or 3 over some period of time. We don't have a closed-end fund. That's an advantage. I don't think it's a huge advantage. It's just, I used to think it was a huge advantage. Whatever, it's not that big. But you got to remember that, right? Like, I'm paid to take a buck and turn it into 2 or 3, right? So I'm looking for entrepreneurs and teams and companies that when we invest $5 million in the Series A, it has the legitimate potential to turn that 5 into 50 or 100. I'm not looking to turn 5 into 10, because I get it. It's so freaking hard what you're trying to do. It's so hard that there's going to be failures along the way. Your 5 is going to turn into 3. Your 5 is going to go to 0. The 15 we invest in the B could go away, right? So I've got to see that. I've got to believe that. And market size, proprietary technology, innovative business plan, core insights, all that's great. I'm looking for people who are contrarian and right. Contrarian and wrong, there's no difference between contrarian and wrong, right? But contrarian and right, like that's where you make a lot of freaking money, right? Because you're going after an opportunity that nobody else sees. But to be contrarian and right and to succeed, it's all about the team. There's nothing else that matters any bit as much as the team that I'm investing in. So I'm a bet the jockey kind of guy, right? Because I don't know a single company that we've had that's been successful or one that's not been successful that hasn't pivoted, that hasn't shifted, that hasn't changed. We spent all this time doing diligence on the IP that we're licensing out of Stanford or LBL or whatever. You know what? Like we spent so much time and energy on it and we're right to do it. It's almost never the thing that creates the value, right? Like the thing that creates the value happened in the next 5 years, 7 years. So it's always, for me, that's all those other things are need to have, necessary, but not sufficient. It's the team.
Thank you.
This was great to hear you two, and I'll split some differences and split some hairs there, but I agree with everything that's been said pretty much.
Do you work 90 hours a week?
100. What are you
Okay,
talking about?
all right.
He's a slacker.
I was at 100, but I've now shifted to 90, not quite seriously. But there's a quick point. No, I have vowed, so if I could just interject. One is I take personal responsibility for solving climate change. So in other words, if it works, it's because of everyone in this room and obviously hundreds of thousands, millions of people around. If it doesn't work, blame me. And the theory behind that is with distributed responsibility, stuff doesn't get done. If people say, well, gosh, here's this other person, what are they doing? When are they going to do it? Things don't happen. So you need to own the problem. And I encourage everyone here to own the problem and do that. So as part of that, that's why I geared up to 100 hours a week. And I have vowed I'm not taking a day off until this issue is solved. So anyway, you can all sign my pledge, but anyway, keep going.
Just remember what happened to Elon Musk.
Yes, I'm slightly more sane than him, I think, so I've got that advantage, but other than that,
I'm just saying you need to schedule some downtime for yourself.
yes. Well, this is it. Here's my downtime.
No, I work a lot of hours. I always have, even when I worked at the big companies. I think that comes with the territory. So one of the things I look for is all in. So I look for someone that's completely committed to their mission. If they're not completely committed, if that's not the most important thing in their life and their family, right next to their family, and I always say family first, and I mean it. But boy, your business is your family, and if it's not, you probably shouldn't be doing it. Seriously. If you're not completely passionate about the problem you're trying to solve, if you're not all in, it's hard. This is hard, particularly carbon. Oh my God, we still don't have a real price on carbon, regardless of what everybody said earlier today. So it's hard. This is really hard, super important. And if you're dedicated to it, we're there with you. And yeah, we work hours. We work hours right next to our teams. The things I'll just try to differentiate how different funds look at different things. So Gabriel, I kind of agree with Gabriel that I don't think it's having an evergreen fund isn't doesn't solve all the problems. It's just one less pressure that we have to worry about. However, I will say that my partner and I are adamant about our companies being very successful. We're not unicorn hunting, but we want them to be very successful because if they're not going to solve the problem they set up to solve, right? We're not a philanthropic organization. We're all about the company making money because that's the only way they're going to deliver on the sustainability promise. And just like Prelude, if you don't solve a greenhouse gas, carbon, environmental problem, you probably shouldn't call us up or come look at us in some way. It doesn't have to be direct. Some of ours are more clearly direct than others. Like you said, clothes has a huge carbon impact. If you'd be surprised, everything has a carbon impact at the end of the day. So I agree with that. Long hours. So that was going to be my other thing. So I already said, try to find life balance. That is super important. I tell my entrepreneurs they got to find some time off, and particularly their family is number one. Boy, that really close second, almost number one, better be their company, and they better be spending a lot of hours on it, seriously. The other news that you sort of heard from these guys, so we looked at over 1,000 deals in just 4 years and only made 13 investments. So, you better have a good story. Mm-hmm. So it's about the technology, of course. It's about solving a big problem. It's about how are you going to solve the problem? What's your business plan? How are you going to get to market? At the end of the day, it is about the team. It's always about the team. It's always about the team. So David solves it himself. Gabriel looks for a good team to invest in. we invest in such early stage companies, it's almost always tech founders that we invest in, because we've actually created 2 companies from universities. We've around a professor's idea. We've do seed and Series A, and we've done a few Series B now. So we're very early stage. So that by definition, the team is not fully formed. And usually they have very little business acumen, right? They have very little business experience. So that's what my partner and I try to solve for. That's what we try to add, both by our personal time, but also by helping them build the teams, because it is completely about the people at the end of the day. My company was kind of doing okay. I was focused on technology. We had 100 patents. We were awesome because we had all these patents. Spent the first half of my company's existence in getting patents, spent the second half getting rid of a lot of them because they were too damn expensive to keep in play, and most of them don't matter at the end of the day. It's all about execution. It wasn't until I started hiring awesome people that my company took off, and it took off quickly. So it really is about people at the end of the day, and it's just kind of what stage you're at. So while I think you're investing typically a little bit later stage than us, so the team will be typically maybe more fully formed. Our job is to get that team in place so later stage investors can run with the ball. That's kind of the way we look at it.
Katie.
Okay. I love this conversation because even as founders out here, like you guys are approaching these conversations with investors trying to figure out what they're looking for. And it turns out it's so different and it's so nuanced, and what you're telling one person might resonate and what you're telling another person's not going to resonate at all. And so we're not an evergreen fund. We don't have LPs. It's Matt and Swat. It's a family's money. Does that mean that we want returns? Certainly. Does that mean that we're gung-ho on unicorns? Certainly not. Do we have a foundation that can issue mission-related investments? We sure do. So I think for us, since we're so early stage, similar to what Gabriel and Mike said, we're indexing on team. Matt's an operator, Swathi's an operator. We feel very comfortable walking into a scenario with scientists or academics and helping them build a company. In fact, when you're writing such a small check at those early stages, it's a tremendous amount of hand-holding. And so it's a relationship. So we're trying to find people that we want to work with for the next 5 to 10 plus years. And so, we're indexing on EQ, we're indexing on, how bad do they want it? How passionate are they? And then I think also, is there something that we can uniquely bring to the table? Sometimes there's a great idea, there's a great founder. Since I'm not in it just for the financial gains, like what can I actually do for them that's going to be helpful? There are plenty of good ideas that don't make sense for us because we cannot be helpful to them at all. So I do think like when you spend time curating your list of who you want to pitch and talk to, figure out who those funds are, who those partners are, and really make sure that you're pattern matching accordingly. The only other thing I would say, beyond team and sort of us being able to help uniquely is, the early stage and just helping to make the world a better place. And like I said, we're all about relationships.
Thank you. Certainly glad that nobody has asked for how much time I spend at work or thinking about work. Before it gets to this, let me diffuse this and ask if there are perhaps any questions from the audience, because I'm sure that some of you take notes, and I'm seeing that fingers are already itching. So maybe we can take a few questions.
I was wondering if you all could address the stage of the investment. So Mike has discussed that in terms of how early stage and what stage of the company you're looking at.
Well, we look at pretty much all stages. Just, again, we don't have outside investors, just my own capital. So I've got a lot more latitude than a fund that's much more focused. And so we've looked at, I've actually even started up a company, which is sorbent optimization business, because within just, if you talk about director of capture, you look at the NAS report, they talk about the significance of sorbent. So I'm working on optimizing sorbents as being kind of a critical fulcrum for director capture and point source capture. But beyond that, I've looked at kind of early stage, later stage. So we're pretty agnostic, as long as it fulfills a mission of materially impacting climate change.
Our focus is Series A and Series B investments as a first investment into the company. It's just where we've settled it and where we feel comfortable. We actually have a pretty broad LPA, so we're allowed to do what we want to do. We invest in some seed stage companies. A fewer and fewer over time because they tend to take as much time as your larger investments, and we want to put capital to work and have a big impact. But we still do periodically when we meet somebody and really are excited by what they're talking about earlier. And periodically we invest in later stage companies. I won't name the company, but I long passed up an invitation to meet this one company, and then we met another company that might or might not have been competitive with them. And I'm like, well, we hear those guys are doing really well. Let's go visit them finally. And I went with my colleague Mark, and we got outside, and we came out of the building, and we sort of looked at each other. Well, not competitive with the other company, but let's invest in these guys anyway. And it was super late. It was a huge valuation, and we just put in $5 to $10 million just because we were so impressed by what they were doing. So,
I think I know which one that is. Cool. Yeah, that's cool. It's a great story. I'd mentioned the Sage already, but I also hinted that we're hoping to double the size of our fund, and that doubling would be in what we call Fund 2, and the idea is for later stage, because we already see some of our companies already looking at C and later stages, and we want to be able to help them. So that's the intention, to be able to invest in later stage as well.
And I've already talked about it, but I can be very specific. So seed, pre-seed, check sizes 100 to 500-ish K. And there are sort of outliers. If we see a really great Series A company that needs people to just sort of help round out the round and we feel a really good connection, then we'll do Series A and B and beyond.
And it maybe actually even connects to what we do from within the university to help launch companies. So we're pretty much at the very beginning, from the idea in the laboratory to helping inventors to launch a company, often in partnership actually with VCs, to form the teams. So I think it's this whole ecosystem that we need to really get this done quickly.
I'd just like to add one thing on this, because I think it's important for this group in particular. I mentioned clean tech bubble bursting, and it did. And a lot of the traditional investors, a lot of them in Silicon Valley, are no longer investing in clean tech. Thankfully, a lot of that vacuum has been filled by some of us. You guys have been at it for a while, so thankfully. But even more so by the Billionaires Club, right? So Breakthrough Energy Ventures, for example, and OGCI, Oil and Gas Climate Initiative. So those are $2 billion funds. Then I think DEV is already looking at a $2 billion fund. At least Bill Gates has alluded to it. So that's the great news in this space. And I think these guys as well, but we syndicate with those. We've co-led 2 deals with Breakthrough Energy Ventures, and that's really important in this space. We don't view, our space, at least I feel like this is a very non-competitive space. We like to co-invest with other like-minded investors. And I think that's good for entrepreneurs. When I was raising money, I never felt that way. I felt like competitors were competing against each other. And I think it's a much healthier ecosystem now, frankly, for the clean tech space. I'm pretty excited. I wouldn't have said that 3 years ago, but I'm actually quite excited about the investing opportunities in this space.
Could I just jump in real quick though? That's a good question, and it's a question that people ask a lot, and it's important to know if somebody you're pitching may or may not invest on you based on your stage. That's a really important thing to know. Mm-hmm. But take meetings. Go meet investors. I'm not saying I'm anything special or whatever, but if you say I'm a seed stage company, can I have a meeting? And I say yes, then take it. It doesn't matter. Yeah, maybe I'll fall in love with the idea and write you a $500,000 check. Maybe not, but develop the relationships. Get the feedback. Hear what they like and what they don't like about your plan. We did a deal with a guy who came into our office, and we had to track him down because it had been mentioned to us a couple or 3 times, and he was like, no, I'm still got my seed stage, $1.5 million. I'm not ready for a Series A. And then he finally came in and he pitched us on participating in a bridge extension for $250K. And I looked at him and I said, Mike, go away and come back with a $10 million plan. I think the sector is ready to go now. I think you've got enough product that we're ready. I think we can write a $6 or $7 million check, and I know a bunch of people who would be really strategic and helpful. And we did that deal, right? So take meetings. Just don't
Yeah.
worry so much. Just be upfront about it. Here we are. This is what we're doing and what we're raising now.
And the best
Good things happen.
Best thing that you can have as an investor say, will you take more money?
Before we get to that and Diego's question, I would like to follow up on this teaming, not only within the companies that you support, but amongst investors. Is that something that you all experience or you're all pursuing? Or is there a certain level of competitiveness where you say, that has to be mine? How do you reach out? Just
I'm gonna
make
echo
phone calls?
Mike with this. It's a pretty close knit community. We know all of the players. There's not a huge amount of people that are gung ho in this space, and so we are very friendly. We are very collaborative. We are actively sharing deals. We are actively trying to help our portfolio meet with, so I think I would say in terms of competition, that is not something that I've run across.
Yeah, this morning I met with the CEO that was pitching me, and I introduced him to 3 other potential investors already today. So, we need more. We need more ideas, more funded ideas, more investment in this space. Even though I said I'm optimistic about it, we still need a few more billion-dollar funds, actually, quite a few more billion-dollar funds to invest in this space.
Well, and I've spoken to everybody on this panel about, in the last few weeks, about investing in at least one of my businesses. So, that it just happens that we're on the panel, but that's just an example. And I think also, just to your point, Mike, about yes, there's a $1 billion fund here, $1 billion fund here, but really it's still severely undercapitalized. One of the reasons that I am now talking at conferences is before I was in private equity, I never spoke at any conferences, I never spoke about anything because I never wanted competition. And now I want the competition. I want people to come in simply because climate change is so important. So if someone gets catalyzed, put a bunch of money up, and we get priced out of our investment, great. At least it helps achieve the outcome. So I think that they are sort of that common view also of the significance of what we all need to do.
So in the interest of saying something different,
Yeah.
yes, and it's
That's
actually
good.
true. I work with Mike and I work with Keely and Matt a ton, and David and I have been talking weekly on a bunch of stuff. It's true, and it depends. And what does it depend on? Sometimes you meet an entrepreneur and you know that guy or that woman, they're not going to have any trouble raising money, and they're gonna raise money, and you want to be in that deal. And then you don't call your buddy Keely and say, "Hey, Keely, I just met this great guy." You're just like, you race. And then the other thing is, it depends on the sector. When we're talking about carbon capture and
So we only get the
capture,
stuff you don't like?
Exactly.
It's a great
Gabriel calls.
This is what's called reading between the lines.
No. Shoot.
It's true. It's called adverse selection.
I
It's
try
absolutely true.
to be
This is good.
candid.
No,
candid.
Thank
I love
you.
that.
About
That is
if you're
awesome.
doing a DAC company, a carbon capture, capture, that thing's going to take hundreds of millions of dollars in equity, and you want to build a cap table that has people who are in it, investors who are in it for the long haul, and who can write repeated checks. But that's really important.
Yep.
If you're looking at that software company,
Yeah.
where it's a
Yeah.
$10 million Series A, and then when
Right.
they're successful, and now they've got $10 million in recurring revenue each year, the next price on that company is going to be like $100 or $150 million because they got that 10x forward multiple. One of my mentors taught me early, you never can buy back the investment you didn't get in the A.
Okay, I'm tweeting my partner, not just send you that AI deal.
That's right.
About sending you that.
I'm just being honest. It depends. And as an entrepreneur, figure that out. Know what your circumstances are, and know how people are going to react to it. This is not just for me and us to know. This is for you to know, right? If you're in a big cap-intensive industry, think about your fundraising accordingly. If you're a software company that can get to recurring revenue, think what do I really need to raise here? How much of this company do I need to sell? And what's my next valuation going to be? Right? It matters. Do you want a bigger ownership of a smaller pie or a smaller ownership of a bigger pie? But there's trade-offs.
But Gabriel, if I call you on a deal, you're the only call I make. You're
I
the
know.
only one who just wait a
Unless it's
So if you call
unless it's
you-
software.
Diego.
No, I had a question about cycles in the market. It's been over 10 years of a bull market in investment, and there are some people talking about downturn. So I wanted to ask you, what's your opinion and how your strategy would change in front of a downturn?
Well, I mean, if you're talking about the public markets, I mean, obviously there's a lot of people who think, there's some risk in the public markets after such a long thing. I think what we're doing for the most part, you're looking at minimum 5-year, probably a 10-year, some cases a 20-year time horizon. So the vicissitudes of the public markets are sort of irrelevant for most of what we're doing, unless you've got funding sources that are dependent on that, which in most of our cases is not the case. So I think that's really not the issue. I think actually the opposite, which is in the case of low carbon, I certainly could see a not unlikely scenario that low carbon is one of those things that suddenly is a buzzword and ultimately gets very substantial valuation, sometimes even irrational valuation. So I would say as potential investors, that's certainly a possibility regardless of what happens in the overall markets, although certainly a market downturn may affect your ability to go public and the timeline on that.
Winter's coming.
Yeah. Of course, I've been believing that for like 3 years, but yeah, I'm a kind of the Andy Grove, only the paranoid survive type of guy. And I will tell you, it's hard to raise money in the downturn. I did it twice, and it's
And
really
the fundraising environment
difficult.
trickles down. So when the public markets go south, something like 9 to 18 months later, the private markets suddenly wake up and see, oh my God, the source of liquidity's gone, both for M&A and for public offerings, and eventually it trickles down. It takes time, but it happens.
Yeah.
And the first trickles, who was it? The guy,
I know. What you mean.
inconceivable to me. What's his name from WeWork walked away with $1.8 million to get him out of the company. Holy
I know.
But the CEO of the
Everyone in
NASDAQ,
here is trying to figure out how to do that.
the CEO, right, like the CEO of the NASDAQ, when that story started breaking, he's like, yeah, the age of the unicorn just ended, right? Like, so I think if you're a $1 billion valuation company, you're already feeling it. Like, suddenly you don't have capital the way you did 6 weeks ago. Be
Yeah.
prepared.
Yeah.
Plan your fundraising cycle as if the next round of money you raise is going to be absolutely the hardest you ever will raise.
And
It's always the next one.
And the best advice I ever had from that I consistently got the best advice from one of my board members was, if they're offering you money, Mike, and you like them, take it.
Right.
Best advice. Never, he was never wrong about that. But to Gabriel's earlier point, know who you're taking it from. You have to live with these people. It's really important. I don't think we haven't spoken directly to that, but I think indirectly through our comments, you want to like the person that you're taking money from, because you're going to have to live with them, right? In board meetings.
Wait, a question up here.
Yes. Are you at times interested in functioning more as an investment bank rather than a venture capitalist? Say you have a technology that's ready and proven, and the payback, you can get paid back over a period of 2 years, for example, and they want financing for that to occur. Would that be something of interest? Like say 20% return annually or something of that sort, where the business case is well proven, we just need that investment for a period of a couple of years.
There's lots of funds that are built around that, right? Oh, repeat the question. He wanted to know if I think you were speaking, would any of us be
Yes,
interested in that model, which is a more proven technology, I assume
Effect
demonstrated
area.
plant operating, lots of
Very
operating
little
history.
risk.
Yeah, I mean, there's lots of project finance money available for that, private equity money. I mean, that's what David, I think, can speak to that because he lived in that world for a while. So you wouldn't come to us for that. There's other, let's say, seemingly less expensive money out there, different terms.
It's just that sometimes they're not aware of the technology, whereas folks are.
I think it's always the case in hard tech. That's one of the many things about hard tech. Volker mentioned going through the valleys of death. There's just not one valley of death in hard tech. There's multiple valleys of death, like at every stage. The lab to the pilot to the bigger pilot, the pilot to the one that runs 24/7, and then finally your first pre-production facility. Every one of those is a valley of death. And I lived or died near death through almost every single one of them. And it's just the nature of the beast. Because you have to get to the low cost capital, you have to have a serious demonstration under your belt. Serious.
Yeah.
And just on Mike's point about it being hard, when I first got started in this and said what I wanted to do, I was in one of the major venture capital firms, and they said, "Why are you doing something so hard?" And like I was uncharacteristically speechless for a moment. I wasn't sure what to say. And then I said, that's exactly why I'm doing it. We're here to do the hard things. And I hadn't realized, but John F. Kennedy had said many years before about going to the moon, the exact thing. We choose to do those things not because they're easy, but because they're hard. Because that, if I was quote correctly, because that challenge is one that we're willing to accept, one we're unwilling to postpone, and one which we intend to win.
Mm-hmm.
And I think this is one that collectively people in this room and at this conference intend to win, and I think that's important. And accepting to do the hard things, that's what we want to do. You're a climber. You want to climb Everest. You're not climb Nob Hill. I mean, let's just be serious. Right? So that's why we're here, and that's what we're trying to do.
Dana?
Do you do third-party consulting, or I guess I was thinking, when you're evaluating a deal, will you use a third party to evaluate?
Sometimes, if it's out, particularly if it's out of our wheelhouse, which, I mean, we're a small team, so yeah, a lot of things are out of our wheelhouse. So yeah, we rely on, and other investors too that we trust. We say, hey, have you looked at this? Here's what we like about it, but I'm not so sure about this. Have you looked at it? Do you have a take on it? Do you think, are we missing something here? I'll tell you, the other side of that coin is Breakthrough Energy Ventures. I'll just say that they've got a deep bench on technology experts on their team, on their full-time team, and on people they can reach to behind their team. They do deep dives, so I borrow their expertise as much as I can. I'll be perfectly honest about it. So.
Yeah, I would just echo, in terms of like technology de-risking, we heavily lean on, not in like a formal sort of third party, but we have people that are experts in the field that we always sort of run by.
So could I lean on you to evaluate a project?
Potentially,
that's what I'm
yeah.
asking you to do.
Yep. I think the second half of this workshop is to
evaluation that I'm
give you an opportunity to talk to us.
something that I shouldn't. Or if it's a good deal.
Just a very quick question. Do any of you invest in fusion?
Not yet.
Would you consider it, or would either do it or would consider it?
We've looked at a lot of fusion companies. We don't necessarily see the economic value proposition of fusion at the moment from an early stage investment possibility perspective, but we think about it a lot. It's actually a big, complicated question. Not fusion itself, but what is the economic value proposition of an energy source, a firm energy source that will not come online until something like 20 years from now, because when you look at their plans, that's kind of what they're doing. And that's going to take something like $1 billion of equity capital to get to the first plant. And that first plant is going to produce energy at something like 25 cents per kilowatt hour, when wind and batteries can do it right now for like 8 cents or 6 cents a kilowatt hour firm, even if you buy really expensive batteries that are going to be better in 20 years' time. So that's like is there an economic value to doing this? On the other hand, you can imagine a world where those things don't solve all our energy problems, and you need firm baseload power that's zero carbon. And you look at something like, I'll give a shout out to Commonwealth Fusion Systems that came out of MIT, and you're like, should I put some money into that? And I brought it up in our partner meeting a month or two ago, and my partner Mark looked at me and said, "You're having FOMO, aren't you?"
But if someone said they could do it in 10 years to commercialization.
They've been saying that for the last
10 years.
And Bill Gates, Breakthrough Energy experts say, yes, I think they actually could.
No,
they invest in the Commonwealth. I look at Commonwealth. It's a very good company, very interesting company. It's a very interesting set of technologies. But to echo Gabriel's point, I think it's very interesting. It's very important. I think it's great for their support. But it's a tough case once you look at the timeline, what happens to other technologies and things. But it's important, so I think it's important that it happened.
And I think you need funds like that with some public money, leverage, and national labs, and everything, right? Because it's a huge investment. VCs aren't really set up for that. We learned that, right? Clean Tech 1.0, that was one of the lessons we learned. So even though we're investing in hard tech, maybe we didn't really learn all our lessons. But yeah, I think it's just too big a ticket for early stage VCs. One of our board members, I think you know him, Nathan Gilliland, is former CEO of General Fusion up in Canada. So
Nathan's a good friend.
Yeah. So Yeah, I don't think we'll.
He has a great company that I didn't see the carbon impact from
Oh,
when
yeah.
I pitched it, and I was like, oh geez, you're gonna make so much money. You can't do it.
But Mark, thank you so much for the question, because I think seeing the problems with fusion make it seem that investing for long-term returns in CO2 technology is not that hard. that came up frequently too, right? I mean, the payback periods are really, really long and risky, and the installations are expensive. But compared to fusion, I think we're good. Perfect.
Well, I think the other problem with carbon is that it's the price on carbon is elusive, right?
Mhm.
I mean, we have 45Q, we have the low carbon fuel standards, which is helping move some projects along right now. Let's hope they stay in place, but will they, right?
Good.
Investors hate anything that may not be permanent.
Good point. I think you point us towards lawmaking, and how much is politics on your daily agenda of things to think and worry about? Does it guide you much, or do you look for ways in how this
I don't
doesn't
think it
play a
behooves you to
significant
worry
role?
about it on the daily. I mean, there's certainly a lot to worry about. I mean, I think at least our firm's sort of standpoint, when we were thinking about what does a robust climate policy look like, how do we make sure that every Democratic candidate has a climate policy, that was very important to Matt and our team. Beyond that, it's looking, like I said, we don't do this ourselves, but we work with folks on, who sits on the appropriations committee, who is making the decisions and figuring out how much federal funding is going to R&D. How can we make sure that more money is going into R&D? Who are the players? I mean, it feels maybe not great to some people that that's how this works, but that's how this works. And I think that if you have the capital and you're investing in really innovative technologies, you're doing, that's part of the puzzle, but so much needs to happen in terms of policy, so much needs to happen in terms of what levers we can pull on the governmental side. So I think that if a person or a family office has the ability to do that, we should be actively spending time there. And we do a little bit of that, but more and more time needs to be spent on that.
Yeah, in my company, I tried to get some policy under the Obama administration that I thought would be a slam dunk, and spent 2 years in Washington and swore I would never spend another day for the rest of my life. So it's frustrating. It takes a certain personality, and it's not my personality. I like to move things quickly. I like to see things happening, but thank God some people are. It does play a role. It does play a role.
Well, I mean, I was going to say on the policy side, we're a little bit more bullish on that. I mean, I think policy is very important. I mean, I think ideally you have an investment which has no dependence on policy. So you kind of say, gosh, policy would be nice, but it works anyway. So I think that's fundamental to everything we're doing, just because there's always uncertainties out there when you deal with a political situation. At the same time, I do think the current things like 45Q and California Low Carbon Fuel Standard are here to stay. We expect that. In fact, we think they're going to be expanding over time. 45Q is probably going to expand and improve. There'll be the equivalent of California Low Carbon Fuel Standard will probably expand to other municipalities or nations over time. And also that in general, the helpful thing here is that this is a bipartisan, at least within the carbon area, is a bipartisan issue. When I go down to DC, which I do every few weeks, I haven't had that experience yet, I'm kind of newer to it, and I show up on like a week or 2 weeks notice, and I've got like a full day of, I was there a few weeks ago, 8 senators or their staff met with me on 2 weeks notice. They didn't know who I am, but they're so interested in this area that, their support. Look, 45Q, as people have mentioned, was passed within this administration. So I think that there are some, despite all the other issues, within this one segment, there are some.
Let's be honest, because it directly benefits the oil and gas through you.
Yeah, no. But
So it's good.
yes,
That's
I
fine.
understand.
I have no problem with that.
Certainly, but no, there's legislation that different constituencies all get behind. But ultimately, leaving aside who benefits cui bono, I think from the standpoint of carbon dioxide removal, carbon dioxide utilization, the fact that there's policies with bipartisan support is a big plus for what we're all trying to do here.
Fantastic. I'm delighted to see more and more questions, but maybe now is a really good time, and maybe even a need for a shorter bio break. Let's break for a good 10 minutes. Then we reconvene, bring in our startup visitors as well. and continue the conversation. So for now, let me really thank you wholeheartedly for this engaging conversation.
So maybe you can explain what's going to happen.
So ideally, we would have liked to have 4 tables in here, one for each of the 4 companies, and team up a company and an investor. That might be a little hard. So I propose that we first hear from the 4 startups to hear what they do, and then have a dialogue that engages the entire audience instead of breaking it up, because it would be really loud if there are 4 engaging tables speaking simultaneously. Hope this works for everybody, and we'll see you in about 10 or 10 and a half minutes.
And come back, because the startups are much more interesting than us.